With the volatility that we saw in the markets today, fueled mostly by Powell's testimony, it's looking like this muted volatility that we've had for the better part of about a week, week and a half, is now ending, and we're likely to see this volatility expand. Another way to visualize that same piece of information is using our 15-day scanner analytics inside of our stock volatility box platform. There, very clearly here, we can see today we had the biggest bar compared to any bar on this chart for the past 15 days. 169 different opportunities off of our daily volatility box models. The last time we had a number close to that, February 21st, and that was 157 trades. So right off the bat here, we know that volatility is increasing. We saw volatility increase today. We saw that take place in stocks we don't typically see hitting our live scanner. Stocks like McDonald's, stock like Yum, Duke Energy. These were all stocks that hit our live scanner today in places where we saw a decent amount of selling, which gave us some nice volatility trades. Now in today's video in particular, what I want to focus in on is the overlap tab. We'll cover all of these opportunities. In the first four, you'll find places in which we did not really have our setup rules met. It wasn't a picture perfect setup. We didn't have all the pieces. However, in the next three symbols here, what I'm looking for, or what I'm hoping you get out of it rather, is that you notice what the difference is between a setup that triggers versus a setup that didn't really trigger in terms of an A+ sort of setup here. And finally, we'll take a look at cold as well. So these are the different stocks we're reviewing today with one very simple setup in mind. And that's our momentum setup. Let me walk you through the rules of that real quick, and then we'll move on to charts. Now for our momentum setup, this is what we're looking for. First off, we need price action to breach our volatility box models. But once that happens, we have three different components we look for. Component number one, Keltner channel wedges. Do we see at least 5 of these plotting in a row, which tells us that price action is now closing outside of the 3.0 Keltner channels, suggesting the likelihood for a reversion to the mean trade is increasing. So that's step number one. It tells us we're extended. So now we know we're extended from our Keltner channel perspective. And if we're also breaching our volatility box models, we know we're also extended from a volatility standpoint. So now we have two different things working for us. Step number two, it's this edge signal confirmation. That's our overbought, oversold confirmation. And this tells us that, hey, we're now looking for, in this case, buyers to come in, hold this level right here, and start to pick price action up higher. We're oversold, overbought, and we have momentum starting to come into play. Now, finally, the last piece of the puzzle we're looking for is this blue dot. And that blue dot is our momentum cross. Probably the simplest indicator out of the bunch here. Maybe the Keltner channels is next. And this just looks for the 3 EMA crossing above the 8 EMA. If that happens, we see this blue dot. If we see the reverse of the 3 below the 8, we'll see a pink dot. So for our bullish setups here, we want a green arrow along with a blue dot. For our bearish setups, a red arrow along with a pink dot here. So that's basically the setup we're looking for. Now we're going to apply this setup today on all of the different stocks that triggered via the overlap tab. For all stock volatility box members, you can find many more opportunities than just those by taking a look at the hourly tab, where you'll find setups throughout the day, along with the daily tab as well. The overlap tab simply takes the best of both worlds, the hourly and the daily, combines them, and gives you a nice clean list of where both breaches are taking place at the same time. One more note for those of you that are unaware of what the live scanner is. The live scanner is a custom scanner we've built inside of our platform. It scans every 2 seconds or so in a universe of about 10,000 plus stocks, looking for places in which price action is breaching our volatility box levels. So it's a powerful scanner, and to me, this is your cheat code, especially as volatility increases, where you get this running list of trades that are working for you, where you have volatility in your favor. You're now looking for the other setup rules to take place. So let's start with NTNX, and hopefully all of this makes sense as we start to go through each chart. So NTNX here reported earnings, and on the backs of earnings, we saw this volatility. Now we don't see any Keltner channel wedges taking place here on the long side, so we can skip NTNX. It was one of those stocks that did not give us an entry. Next up, Duke Energy. Duke Energy, we got close, but we didn't quite meet our setup rules. Here you can see we had 1, 2, and 3 Keltner channel wedges. We fell short of the 5 that we're looking for, so a little bit imperfect there. And we did not hold this level. We broke below it, and we didn't see an edge signal confirmation. So again, no green arrow, no 5 wedges. We broke below the level. Doesn't really look all that appealing from a setup perspective here. We still did see buyers come in and take place, but keep in mind, as we look through these opportunities, we want to find the very best trades. Now next up, we had Sienna, so let's take a look at that. And there's same exact idea as well here. Sienna, we had 1 and 2 Keltner channel wedges that plotted. No edge signal, momentum signal came into play. Again, not a picture perfect setup. We still did hit our first target, but we're looking for something a little bit better. And that's where JP Morgan comes into play. JP Morgan here, if we take a look, should give you a much different example of the same setup we've been discussing. We had 5 plus Keltner channel wedges. In fact, we had way more than 5 here. 1, 2, 3, 4, 5, and then all of these were all extra, so they added confidence. So now we know we're extended from our volatility standpoint. We know we're extended from our Keltner channels standpoint. Next up, we see the edge signal confirmation. So now we have that condition also being met. Real nice strong candle, matching wicks. This is an engulfing body for the previous candle. So again, adds confidence to the idea we're looking for buyers to step in here. We then see the momentum cross, get a 2-bar pullback. If I zoom out, you'll see just how nice of an entry that was for buyers to come in, pick up this 138 level inside of JP Morgan, and really drive that up beyond the 139 level. So this is the kind of setup that we're looking at. In the grand scheme of things, you might argue that this is a bearish trend, and we simply just made a pullback to what is the previous support zone, or resistance zone rather, and price action sold off from there. And that was the opportunity that we were able to take advantage of. A nice $1 move where we have all of these different pieces going for us. So JP Morgan, an example of one setup that looked real nice here. Another one, MDT, and then we'll move on to MTB. MDT here, same exact idea, and your eyes should be able to recognize this setup a lot easier. 5 Keltner channel wedges, 1, 2, 3, 4, 5, a lot more than 5 as well here. We've also breached our volatility box models. We get the edge signal confirmation after this, so right here, and we also had one before as well. We then get the momentum cross that we're looking for, and this is it. After this bar, we have the conditions of our rules met, and we're looking for buyers to really hold this level right down here, the 79.50 area. If I zoom out, we take a look to see what happens here. We have buyers try to hold it, sellers come right back into play, and one more time into the close, we chop. We don't break below. We don't see the same buying activity as we did inside of JP Morgan, but we also don't break below. So this was a scratch and an example of a place inside of Medtronic where the setup triggered. We had all of our rules met, but we just didn't see the same level of buying activity as we saw inside of JP Morgan. And then next up, we can take a look at MTB. MTB here should notice a little bit similar setup here. Now hopefully your eyes are getting trained to this. We had 5 plus Keltner channel wedges plotting. We then had the edge signal confirmation. We had the momentum cross. Once we had the momentum cross, this is where the rules are met. After this, we can see a nice little rally here. One more time, a little bit of a sell-off. One more time, a little bit of a rally. Came back in, closed inside of our clouds, chopped around sideways. So out of the 3 that we looked at, you have an example of one in which we made a slight move higher. Nothing too crazy, but definitely you did get your risk. Your risk here, 53 cents. You got at least 57, a little bit higher as well, about 60 or 76 cents in total. So an example of a small winner inside of MTB. JP Morgan, much nicer winner. A nice $1 move, also a larger name, also have more eyes on it. Another one we took a look at was Medtronic, and this was an example of a scratcher. Nothing really took place, just price going sideways. Now the last stock we have on the scanner was Cold. If we take a look at Cold, no Keltner channel wedges plotting. We don't really see the same setup. Now one more that I'll show you before we close out is one that hit our daily live scanner, and this was McDonald's. So if we take a look at McDonald's here, this was another name that we don't typically tend to see on our scanner that gave us a nice setup here. So if I load in our models inside of McDonald's here, we had the Keltner channel wedges plotting. more than 5, we had the edge signal confirmation, we had our momentum cross, and despite all of those things taking place here, we see price action continue to keep selling down lower. And this right here was an example inside of McDonald's where we simply did not see the buyers come in as we would expect. This for me was a stop. I thought it was interesting, a stock where I think typically we would see buyers come into play. We even saw this jolt up higher here where it looked like we were making a real nice move in the direction of the target, got rejected fairly quickly with sellers coming into play here. So McDonald's here looks interesting for a continuation to the bearish side, considering that we did not see buyers come in and buy these levels where we expected. So hopefully through today's video, you had an example of not only winners, losers, scratches. We discussed the exact setup that we're looking for. We found ways to narrow down larger lists like the daily and the hourly list into something that's a little bit more digestible. It's for those of you that just want opportunities delivered to you, to your inbox, if you will. You can find those right here on the overlap tab. If you're a more active trader, dive deeper into the hourly on something like a 1 or a 2 minute time frame chart, or something like a daily where you can even expand that a little bit greater in terms of time frame if you wanted. I hope you found today's video useful. A lot of different things we covered. I'll leave links to some helpful resources in the description box, but I hope you find this video useful, especially with taking advantage of this volatility, as it looks like we're starting to hit this next stage where volatility increases. Take care, everyone. Good luck trading, and I'll see you in the next update.